Hi everyone, this is Ted Bauman here of the Bauman letter and the Smart Money portfolio as well as the Alpha Stock Alert. I want to talk a little bit today about a chart that I found online which is really very fascinating, and I think it's something that helps to put into perspective the kinds of strategies that you might want to adopt as you go forward and at trying to protect your wealth in addition to growing it. What it shows is years across the top, and then it shows asset classes from top to bottom. And those asset classes are essentially divided into things like real estate trusts, emerging markets, global high yield bonds, the S&P 500 as a proxy for the US, commodities, gold, treasuries, cash, and a few other things. Now, there's a couple of things that jump out at me about this chart, and I want to share them with you because I think they say a lot about our assumptions, and they help to challenge some of the assumptions that we may have. And first of all, we've all talked about what a great bull run we're in ever since the stock market well, basically the financial crisis of 2008. And here's the U.S. stock market down 37% that year. Bounced back up pretty rapidly, but then kind of tailed off. But again, in 12 and 13 and 14, also high performer. In 2015, not so much, and that was because of the problems in the Chinese market. But it still remained positive, and it still remained one of the top earners in the global asset mix. 2016, it was number 2. 2017, despite all the excitement of last year and what a great run we had, it was only 22%, right? And this year we are struggling, and in fact, this figure is a bit dated. I think we're back down to about 0 at this point, at least on this particular day that I'm recording this. But look at what appears consistently to be in the top 3 or 4 of the asset classes. MSCIEM is basically emerging markets. It's an ETF that represents emerging markets. Look at this. 2004, it's number 2. 5, it's number 1. 6, number 2. 2007, it's number 1. Drops way down during the crisis. Bounces back up to be number 1 in 2009. Number 2 in 2010. Falls again in 11. Rises again in 12. Falls consistently over the next 3 years, and then it jumps back up in 2016. Sorry, last year it was the single best performing asset class, and this year it is outperforming the U.S. stock market, which is represented by the S&P 500. Now, the reason this is important is because in my smart money system, we always have 2 positions in emerging markets. And during 2017, the smart money system outperformed the Standard & Poor's 500 very significantly. And it did this primarily because the emerging market section of our portfolio did very well. Now, the other thing that we're invested in the smart money system is commodities. We always have at least one commodity ETF in our system. Look where commodities are this year. They are basically the very top earning asset class in the world so far this year. So as you can see, 1, 2, and 3 of the asset classes that we pick with the smart money system are, all 3 of them are basically in the top 4. And I think that's one of the powers of a system like that, where you do a regular rotational strategy. That's why we've done so well. Now, there's a couple of other things about this chart that I think are very interesting. If you look above this line, which are the top 5 asset classes, look how often gold occurs. 2005, 2006, 7, 8, 2010, 2011, actually in 2009 as well. Then again in 2014, 2016, 2017, and 2018, it is now the 2nd highest asset class. Gold is traditionally something that we think of as having is basically a store of value. It's not something that we think of as being a speculative play, but it tends to have its moments. And as we can see in 2010, it had a hell of a moment, rising up almost 30% a year. Now, as we know, it had a big crash back down again over the next 3 years as people realized that the stock market was bouncing back, the U.S. stock market, and they started to move out of gold and back into the higher yields of the stock market. But it's climbing back up. Let me look at that. It's basically you can see the trend line. It's moving up every year. So the basic message for me is that we think of the stock market as the place to make money, but it isn't always. And if you look at the number of times that the U.S. stock market has been, in the, out of the top three, for example, it has been out of the top three for most of the last 15 years, right? In terms of the the main sources of return, it is represented, or rather, it isn't in the top three as often as gold. It's not in the top three as often as emerging markets. And I think that that's telling us something. I think the thing to understand is that the burst of growth that we've seen in the U.S. stock market in the last few years is an aberration. Normally, other asset classes outperform the U.S. stock market, and they will again. And it looks to me like 2018 is the beginning of a trend like that. So when you are making your investment decisions and when you're considering how much to allocate to the different kinds of products here at Banyan Hill, don't forget products like the Smart Money System, which gives you balanced and rotated and diversified exposure to commodities, emerging markets, as well as the U.S. stock market. This is Ted Bauman. I'll be speaking to you again soon. Thank you.